Are you tired of jumping from one strategy to another without seeing results? My name is Loaded Forex, aka No Signal, No Entry. I've been getting countless messages from traders in our community asking me this simple question: what is the secret behind the Loaded Forex strategy? Why do I call it Loaded Zone? And how does it actually work in the Forex market? My strategy is very simple. Yes, it's a combination of trendline with support and resistance. And one thing I want you to understand in Forex trading is simplicity is the key in Forex trading. And I've been exactly where you are some years ago, where I was confused, frustrated, I don't know what to do, chasing losses back to back. But in this video, I will review a simple, powerful Forex trading strategy combined with trend lines and support and resistance for consistent results. Every Forex beginner trader should know this. And if that sounds good, please take a moment to like this video, subscribe to our channel, and turn on the notification bell so you never miss any of our powerful Forex trading tutorial. Doing this helps the YouTube algorithm to recommend our videos to more Forex beginners and unprofitable traders who are eager to learn how to trade profitably. Our mission is to make Forex trading simple and easy to understand for everyone, whether you are just starting out or looking to become consistently profitable. And also, if you are interested to be part of our community on Telegram, where you will get access to free weekly profitable signals and market insights, it doesn't cost you anything to join. Just click the link below this video description and become part of a supportive trading community that is focused on helping you to grow and finally see consistent result. And I'll see you after the intro. One of the things you must understand as a professional price action trader is to always have a guide. I can't emphasize more than this, right? Always try to use a guide. You know, a man without a direction or without a manual will miss his focus. So once you start approaching trading with a guide, with a manual, trust me, you will start having incredible results in Forex trading. And in today's video, I'm going to show you how to use manual or a blueprint to trade Forex in this video. And this is very simple. This guide will help you to do things in order. You know, the time to buy, the time to sell, the time to wait, the time to study the price action, the time to understand what the price is telling you. All these things are very, very important if you want to make money in Forex trading. And in today's video, I'm going to walk you through the guide that I love to use all the time whenever I want to use this system to trade the financial market. The first one is to establish a concluded trend. This is very simple. You know, before you can establish a concluded trend, number one, you have to understand basic structure. You know, when the price action is trending to the downside, giving us a feature like this, lower high, lower low features, is a sign that sellers are the one in charge of the market, right? This represents sellers are in charge of the market, right? And other way around, whenever the price action is trending to the upper side with a feature like this, higher high, higher low, then higher high, is a sign that the buyers are the one in charge of the market. When you spot this structure, just focus on buy opportunity. Whenever you spot this structure in the market, just focus on sell opportunity. The first step we want to apply under this blueprint is to establish a concluded trend. Now, if you look at the present trend right now, the price action has been trading towards the upper direction by giving us higher high, higher low, higher high, swing higher low, swing higher high, swing higher low, then equal high. Now, this is a well-established bullish market structure that indicates buyers are the one in charge of the market. Let's move to the second step, which is the trend protector, right? We have to establish trend line protector. And how do we establish our trend line? Number one, there are different ways for you to establish your trend line. It's either you connect it from the wick, right? From the wick here to another wick, right? Or you connect it from the wick of the candlesticks through the body of the next candlesticks like this. You can see this is the point 1, point 2, point 3. I want to establish my trend line in such a way that I can see multiple touches on the trend line. Let me show you how to do it. And I love to place my trend line on the body of the candlesticks and connect it to the next body, right? Or better way, I love to use line charts, right? I love to use line chart to connect my trend line. Then I change it to candlestick chart. This gives me a perfect trend line establishment whereby I have point 1 here, then point 2, point 3, point 4. So I have 4 points, 4 touches on this trend line. The next step right now is to exercise a lot of patience. This is very, very important. I've been saying all these things over and over. Without patience, your strategy is useless. No matter how perfect your hedge is in the market, if you lack patience, discipline, everything is useless. Before I forget, if there's any specific trading challenge you are facing right now in your trading journey, whether it's understanding a strategy, how to manage your risk, please let us know in the comment section and we'll make sure to cover it in the future content. And also, if you're interested to be part of our community on Telegram, where you will get access to free weekly profitable signals and market insights, it doesn't cost you anything to join. Just click the link below this video description and become part of a supportive trading community that is focused on helping you to grow and finally see consistent results. The third step right now under our guide or our blueprint is to wait for price action to break the trend line and structure of the trend. Whenever the price action is trending to the upper side, as we all know, price will always create higher low, isn't it? Which is going to be our protected low. Why is it protected low? Price must not trade below it or close below this protected low around the zone. Whenever the price action close below this protected low, is a sign that buyers are no longer in charge of the market. Then the sellers are now in control or in charge of the market. Then the price action give us a new low here, higher low, then higher high. So this place now becomes the recent higher low. In a situation whereby the price action invalidates the last higher low here, is a sign that bullish market is no longer valid. We are now back to bearish market. Sellers are now in charge of the market. So we've done 2 steps right now. We've established a valid or a concluded trend, isn't it? Then trend line protector. Do you know why this trend is a concluded trend? The price action reacted as a result of the key level around the zone. If you extend it to the historical data, you'll be able to see it very well. Once upon a time, this zone was acting as a support, holding the price action from going to the downside. Then price invalidated it here. Then price came back and retested it. We have 3 touches. If you continue to establish it to the future, you can see after price action sold down to the downside, price came back again to mitigate the zone. It was serving as a support around the zone once upon a time. Now is now serving as a resistance. So price reacted here the 4th time, then the 5th time. So there are 5 touches right inside this key zone. And when the price action reacted here the 5th time, price created what we call equal high. And whenever you see equal high, it's a sign that sellers are about to take charge of the market. And before you can establish that, you have to wait for price to change the structure. And this place was the last swing higher low. here during this bullish market. So if the price action close below this higher low, is going to validate our third step under our blueprint. Wait for price to break the trend line and structure of the trend. Then let's exercise a lot of patience. If the price action or a bearish candlestick close below this uptrend line and this higher low here, is going to validate our third step inside our blueprint. So let's see what the price action will offer us during this market condition. Finally, the price action invalidated the structure to the downside, right? The price action invalidated it to the downside by taking out this higher low here. This was the last swing higher low. The final step, which is the fourth step, is the entry in our blueprint that we use to execute a system like this. The first thing we must observe on 30-minute time frame before we execute this system is to ensure that the price action give us a retracement back to the zone, right? Now, where is the zone? Let us look at the historical data. Now, we have price reacted around the zone here as a support. Once upon a time, let us extend it to the future. Price reacted here the third time, first time, second time, then the third time. Let's extend it to the present future, right? Now we are waiting for price action to retrace back into this zone, right? To mitigate this trend line and the resistance. It was serving as support here once upon a time. Now price invalidated it to the downside. Now it's now serving as what? Resistance around the zone. And we also need to exercise patience. We must exercise a lot of patience and wait for price to retrace back here inside this zone. And we can also fine-tune the zone, right? So that it can cover more points, right? So let's see what the price action will offer us on this trade. We have to exercise a lot of patience. No entry, no signal. And if price action did not mitigate our zone, there is no way we are going to execute. Don't forget, we are using the last step, which is the fourth step inside our blueprint for this system right now. Now the price action is inside our PO high. Are we going to execute immediately? Capital no. We can't execute immediately. We still have to wait for price to give us more confirmation that sellers are actually present at our PO high so that we can execute without hesitation. And if all the signs are not available, there's no way we execute. We just have to allow the price action to move and wait for the best opportunity that will present our criteria or our confluences inside our zone. Now the price is inside our zone. What are the confluences that we must see before we execute this setup? The first one is we want to see volume reduction, weak rejection. Then the third one, we want to see change of structure, change of structure. Then the fourth one, we want to see CTB. What's the meaning of CTB? Counter trend line breakout, right? You can see volume reduction inside our POI right now, right? You can see the way the price action is struggling inside our zone. You can see volume, low volume candlestick, then another high volume candlestick, then low volume candlesticks. So this is a sign that the price action is struggling inside our zone. And if you look at the momentum of this bullish candlestick, is way bigger than the momentum of these candlesticks, right? That's its volume reduction. Now, the second one is weak rejection. As we can see a lot of weak rejection at the top of the candlesticks while approaching our zone. That's confirmation 2, criteria 2, or confluence 2. Now, the confluence 3 is the change of structure. Let us look at the structure, right? On 30-minute time frame is the bullish structure. Higher high, higher low, higher high, higher low, higher high, equal low, higher high, higher low. Then we have higher high. If the price action invalidates this higher low here, it's going to establish or give us our third confluence, which is the change of structure, right? So now we have to wait for price to invalidate it. It is very important to always trade or execute with confluences. Imagine we are using pending order like sell limit order. Then we position our entry zone around this place, then our stop loss there. What will have happened? Price will have taken us out of this market. But the fact that you analyze that price is going to sell inside your zone, that doesn't mean you should sell immediately. You still have to wait for extra confirmations, extra confluences before you sell or before you buy. These are the things you have to put into consideration before you make up your decision, before you go to MT4 or MT5 and press that sell button or buy button. Don't do these mistakes. Wait for confirmations. Always use a guide. Always use a blueprint. Always use manual before you execute your positions in the market. Now, looking at this market right now, price is here to invalidate our structure. So we still have to wait for price to invalidate the structure to the downside. That is the criteria we are setting for ourselves, right? So until the price action invalidates it, close or invalidate the structure to the downside to give us a bearish structure, that's when we can execute our trade. Now the price action is here to close below it. We need it to close below that zone. Finally, we have it. Price just closed below the structure, right? Price just closed below the structure. So what is the first step, which is the final step under our entry confirmation, right? Is to use our counter trend line. As you all know, this is how I love to establish my trend line. I love to use line chart, connect it from the body of the line chart. All right, this I have my points A around this zone here, and then I have my point 2 here. So if I connect it like this, then I have to extend it to the future. Then I change it to candlestick chart, isn't it? So I have to wait for price to break it to the downside. So if the price action did not break this fourth step, which is the counter trend line breakout to the downside, I'm not going to execute. The fact that the price action already invalidated the structure to the downside to give us a bearish structure that aligns with the bearish structure on 4 hours time frame. If 4 hours time frame is bearish, right, it's giving us a bearish structure, then on our entry time frame, which is the 30-minute time frame, we have to exercise a lot of patience and wait for price to also give us a bearish structure as well. Simple as A, B, C. So we have 3 confluences right now. The first one, we have volume reduction, wick rejection, then change of structure, right? The last step right now is to exercise a lot of patience and wait for price to invalidate this counter trend line breakout to the downside. So let's see what the price action will offer us on this trade. Price is still trading above this counter trend line. The rules or the purpose of this counter trend line is to protect us from taking trades blindly. In as much the price action is still trading above this counter trend line, we are not executing. We are not going to execute anything. We just have to wait. We must wait. It's a must for us to wait. No entry, no signal until we're able to see a bearish candlestick that invalidates this counter trend line to the downside. That is when we will execute our position. Finally, we have it. Now it's time for us to execute. This place is our entry zone and this place is our stop loss zone, while this place is going to be our take profit level. So let's play the candlesticks and see what the price action will offer us on this trade. Normally, you have to get used to this, a moment whereby the price action will retrace inside your stop loss zone. So that's why risk management is very, very important, right? So price action can't just move towards single direction. Price will give us a zigzag movement, up, down, up, down. So if your risk management is okay, you're using the proper risk management, then nothing to worry about. So you just have to allow the price action to move towards your zone. Can you see here, price almost hits our stop loss here, right? Price almost hit our stop loss zone. Imagine we did not give our stop loss enough breathing space. This spike will have taken us out of the market, right? And it will be painful. Imagine price take you out of the market and later move towards your direction. Is more painful than anything. That is why when you are setting your stop loss, always give it enough breathing space. 1 pip or 2 pips away from hitting our stop loss, but we are so lucky price action did not hit our stop loss zone and price smashed our take profit. If this video has added value to your trading journey or inspired you or blessed you in any way, we would truly appreciate your support for the channel. The best way to do that is by simply clicking the like, subscribe, and turn on the notification bell, which tells YouTube this content is helpful and pushes it out to more traders who might need it. And also don't forget to stay connected with us and continue receiving practical tips, strategy, and market insight that can make a real difference in your trading journey. Your engagement goes a long way in keeping this channel alive and allows us to keep creating valuable content for you and other traders around the world.